4.9%. That's the annual increase of the Consumer Price Index, or the CPI, and it actually exceeded expectations. The initial projection was 5%. So this is good news. Unfortunately, it seems you can't have good news without bad news, and there's no exception. If overall inflation went down, the price of gas, used vehicles, and housing like rent went up. Housing costs, which make up about 1/3 of the CPI weighting, are now up 8.1% from a year ago. Used cars went up 4.4%, energy index went up 0.6%, and gasoline went up by 3%. Still, many think that this is a sign that the Fed's campaign to quell inflation is working. It is way too slow to their liking, but at least it's going down. Starting in March of 2022, the central bank has enacted 10 consecutive interest rate increases, totaling 5 percentage points, taking benchmark borrowing rates to their highest level in 16 years. Many investors take it to mean there will be no more increases after the next Fed meeting, but that's just speculation. We should remember that 4.9% is still well above the Fed's 2% target, and April's 0.4% rise in consumer prices is much hotter and the 0.1% rise than the month before. The other thing to watch is the value of the dollar. The dollar has increased in value by 11.5%, even as inflation rose last year to 9%. It was the contradiction of the century. The US dollar is used in approximately 90% of foreign transactions worldwide. This means that during periods of global economic distress, like we are currently experiencing, the dollar generally rises. Investors consider it a relatively safe haven. Even though inflation is high domestically, the US is not alone in facing this problem. Countries all over the world are experiencing high levels of inflation. One difference, though, is that the Central Bank of the United States is moving more aggressively to tame inflation than its global counterparts. This has led to higher interest rates in the US, making it an attractive place for capital. So even though prices are rising here, the dollar is increasing in value relative to other currencies. Now that inflation is stabilizing, the economies of other countries are recovering. As those countries take an interest in other assets like gold, dollars will return home. We also have this big meeting with the BRIC nations, and they're looking to create an alternative dollar. And Saudi Arabia has expressed interest in accepting currencies other than their current preference, which is the US dollar. If their plan pushes through, we will most likely have mountains of fiat currency and no gross domestic product increase. And that is an economic disaster. The threats to our economy are becoming stronger and stronger. There's hardly anything we can do about it except contribute to the country's productivity. However, we can do something about protecting our wealth, and that's buying physical gold. It will play an important role in the future. Yes, it's hard to look at the big picture here, but gold is a long-term investment, and that's why we need it now. We need to think long-term for our sake and also for our country's future. Of course, talk to your financial advisor first, but you're looking into real gold, real physical metal, contact Noble Gold Investments. We can help you with this. Check out our website at noblegoldinvestments.com.